Good afternoon. Good afternoon to all of you. I am Dr. K.N. Jha. I hope Mr. Otto Gemesis is there with you. Okay. He is your local instructor, right? Mr. Otto Gemesis. Okay, you are there. He has raised his hand. Okay. This particular course, the name is Construction Economics and Finance, right? In your vocabulary, it is ECL 708. All of you can hear my voice? Okay. So, as the name suggests, we will be discussing about various construction economics issues and finance issues, right? So, this particular course will have 3 lectures, rather it will be 3 hours. The lectures would be on Wednesday and Friday, right. So, 1.5 hour lectures will be taken by me, and the tutorial would be covered by Mr. Otto Gemesis, right. All of you must be knowing this. Okay. Now, I will just introduce you to the this particular course. So, I have brought certain course content, right. So, the course content basically will involve engineering economics part, time value of money we will be covering. Then we will discuss the various issues in discounting, the net present value or net present worth of time, net present worth we will be discussing, then rate of return, then we will cover the different methodologies to compare various alternatives. We will also be covering incremental rate of return method. We will cover benefit cost analysis, which is one of the methods used for public projects evaluation, right. Broadly, if you see, there are 2 kinds of projects, one private projects, another one public projects, right. Public projects, you must be knowing that they are taken up by different governments, like it could be construction of a hospital, construction of some school buildings, college buildings. So, these are called public projects. So, their profit is not the only motive, right. So, we have a different methodology to evaluate those kind of projects. So, that we cover under benefit cost analysis. Then we will cover replacement analysis. Now, replacement analysis basically deals with finding the most suitable time to replace your asset. Asset could be your equipment, asset could be your buildings, asset could be anything, right. There are different types of asset that we will cover in detail. For example, there are fixed assets, there are current assets, all those things we will be discussing. But for the time being, just understand that we will have to find out certain means through which we can find the most suitable time to replace a particular asset, right. Because you will see that once you start using a particular asset, initially the cost may be less, but as they start aging, the cost you will find that it starts increasing. So, we have to basically find out the time at which the replacement is most beneficial. Then we will also be discussing about break-even analysis. Basically, break-even analysis means that finding out that kind of production level at which the company is just able to recover their cost, right. So, as long as you are above the break-even point, you are earning money, right, you are making profit. Below the break-even point, your costs are greater than your returns, right. So, you are not making any profit. So, we will be trying to find out the methodology to locate the break-even point for a single product situation, and we will also be covering break even point location for multiple product companies, right. That means companies which are only into a single product manufacturing and the companies which are into multiple products manufacturing. Am I going all right? Am I going all right? Is it okay with you?
Okay.
Okay, fine. Any problem at any point of time you have, please do not hesitate to ask me. Any time you find there is difficulty, you are not understanding, please do not hesitate. You can raise your hand, you can ask the question. Okay? Now, the second part of the course is related to risk analysis. You must be understanding that construction project involves lot of risks, right. What kind of risk you face if you start a construction project? There may be problem in getting the site itself. The project sites may not be clear, right. Lands may not be available to you, right. So, this is one risk. There could be failure of design, that could be another risk, right. Suppliers not meeting their commitment, that could be another risk, right. Likewise, we have numerous, for example, another risk could be clients not paying you. Let us say you are a contractor, right. Owners may not be paying you in time, that is also a risk, very high risk, right. Some clients may not be good paymaster, right. They may be delaying the payments, right. So, that is another kind of risk. So, in this particular module, we will be covering what are the construction risks, how to identify those risks, how to quantify them, right, and how to manage the risk, right. Clear? Then in next module we will be covering about different aspects of pricing. See, once let us say as a contractor you are submitting a bid, you understand the bid? Do you understand bid? What is bid? Basically the price that you are submitting for doing a particular work, right, that is called bid amount or bid price. So, we will try to find out how to arrive at the bid price, right, at what markup, that means at what profit margin, contingencies and risk we should cover in our price, right, so that neither we are too high in our bid nor we are too low, right. If as a contractor I am quoting a higher bid, that means I may not be getting the project itself. You understand this? Suppose you are quoting for a project 110 crores or 110 lakhs, somebody is quoting 90 lakhs. So, the person who is quoting 90 lakhs, he may be getting the job, he may be getting the project, right. So, if you are quoting a higher price, you may not get the project. If you are quoting a lower price, what will happen? It will so happen that you may get the project, but you might lose the money at a later date. Is it clear? So, we will try to find out the best possible scientific method of pricing your bid. Bid price consists of number of components. It includes labor cost, it includes material cost, it includes plant and equipment cost, it includes your overhead. Further, the overhead could be your general overhead and your project overheads, right. Is it clear? What bid price consists of? What are the items, what are the things that you have in bid price? One is your labor cost, material cost, plant and equipment cost, your overheads. Overheads could be general overhead or it could be project overhead, and on top of it you will add your profit margin, you will add the contingencies for risks, right. These things are also added. So, we will try to see how to basically arrive at our bid price, and then what are our chances of winning the bid, at different markup levels, right. That means we would like to answer the questions that if I bid at 5% markup, what is my probability of winning the bid, or that means what is my probability of being successful. If I bid at 10% profit margin or 10% markup, what is my probability of winning the bid. So, these type of questions we will try to address in our section on work pricing and cost elements of contract. Are you able to see this slide? Are you able to see these slides? Yes? Fine. Yes? Any doubt? Okay, thank you. This course content is in continuation, like we will also be exposing you to construction accounting, right. Construction accounting is different from manufacturing accounting or accounting processes followed in other industries, right, because here you will find that projects are for long duration. It could span for more than one financial year. What is the financial year in Ethiopia? Your financial year starts from which month? Does it start from April? What is the financial first financial, I mean what is the first month for that financial period in your country? In India it starts in April. What about Ethiopia? Which one? July. So, basically it starts from July. Okay, so what will happen that in your construction project may span across more than one financial period, right. It can extend to let us say 1.5 years, it can be for 2 years duration, right. So, all these things you will find that makes construction accounting slightly different from other accounting procedures, right. I will briefly be able to tell you how to record the various accounting transactions. What is debit, what is credit, what is T account, right. What is debit, what is credit, what is T account. I will also be able to tell you with small examples how to prepare profit and loss account and balance sheet, right. But as an engineer, you are not supposed to prepare them. As an engineer, you will find that your job would be to be able to read these documents, right. So, at the end of this particular module, you should be able to read the profit and loss account and balance sheet. You may not be able to master the art of preparing the profit and loss account and balance sheet, but you should be able to interpret the different figures that appear in these two documents, profit and loss account and balance sheet, right. Then we will also be discussing certain aspects on ratio analysis. There are different types of ratios, you will see there are acid ratios, then you have many other ratios, right, operating ratios. So, those things we will be covering in one of the lectures, right. Then I will briefly be able to tell you about the various ways of depreciation methods. In that we will be covering straight line methods, sum of years digit method, then it could be declining balance method, and then some other methods also we will try to cover under this module, right. Then we will be briefly covering about working capital management, right. You will find that working capital is one of the most important things which has to be seen by a engineer or a manager, and that is why we will put slightly more emphasis on working capital management part. Then we will also be briefly touching on the different sources of finance, right. Then some problems we will be trying to we will be solving, and we will try to take some case studies and try to illustrate you all the concepts that we have that we will be discussing in different classes under this particular course, right. Now, I will just try to give you the few textbooks and reference books, right. You can see this particular slide. We will be, for economics part, we will be covering mostly that book by Riggs, Bedworth and Randhawa, right, the first one which is listed out there. Then there are many other good books. You can try to get hold of any of these books. Most of these books cover economic aspects in detail, right. You have a book by Tarquin and Blank. Then there is a very old book and very good book by Taylor at number 3, right. Then you have a book by Thewson, and for the financial management part there is a very good textbook by Van Horn at serial number 5. You can make note of these textbooks. All of you are able to see this slide? All of you are able to see this slide? Kindly take note of all these text and reference books. You can take any of these books, and whatever we will be discussing here, you will be able to find them in most of these textbooks, right. While you are writing, I would just like to know how many of you have some experience of working at project sites. Any of you have worked at project sites? Have you worked at any project sites earlier before joining this particular course? Yes, please. How many of you have? Can you raise your hands? How many of you are aware of construction projects? Okay. All of you have written down this? Can I go to next slide? Yes. Okay. These are some other textbooks. One is by Brigham, that is basically on financial management. Then at serial number 2 you have a book by Kolb and Rodriguez, again on financial management. Then you have a book by Walker at serial number 3, and you have a book by Wilfred. This is for accounting, right. One of the module in this particular course relates to construction accounting. So, it is one of the very useful books as far as accounting goes, construction accounting. You can refer to this book also, right. Clear? You have copied this? You just need to write the name of the author and the name of the textbook, that is all. You should be able, these are quite I mean popular books, so you should be able to find them in any of the textbook shops. Right? Can I go to next slide? Yes. Okay. Okay, I have given you few more books. These basically will be common to other courses also, but I have just tried to list them out here. One is a book by Pilcher. It's on basically principles of construction management. It's quite old book. Then at serial number 2 you find a book by Lifson and Salfer. Lifson and Salfer. It deals with decision and risk analysis for construction management. Because one of our one of our module in this particular class relates to risk analysis, so you can refer to this book. Then there is a book by Dagoff and Friedman. It's on construction management, right? And some more reference book you can find it at number 4, again by Van Horn. Its title is Management and Policy. And the last book which is at number 5, Harris and McArthur. It's a book on modern construction management, quite a good book, and you can use this book for many other courses also. So it deals with many relevant topics as far as construction management goes, right? So I think this you must be having in your library, so you can go through these books, right? When we cover the project cash flow part, you may refer to this book, right? We will discuss what cash flow means and what project cash flow means. When we discuss project cash flow basically is how much money is incoming at different point of time and how much money is going at different point of time. If you try to show it on a piece of paper, that you call it as cash flow, right? And to be more specific, it is known as cash flow diagram, right? So this also we will be covering through this particular book, Project Cash Flow. Now I have made the course plan different classes wise, right? Say for example, in class 1, which is currently going on, my target is to cover, I must give you the introductory background for this particular course, and then we will be discussing the time value of money part and briefly touch upon rate of return. So this is the target for today's class, right? I have to introduce you to the subject, right? Then I have to introduce you to the time value of money, right? And I will also be telling you what are the situations in which you don't need to consider the time value of money. Those are called problems of present economy, right? So these two things and rate of return, these basically 3 things I will try to cover in today's lecture. So are you clear about today's class, what we are going to cover? We are going to cover the situations in which we need not take time value of money into our consideration, and we need to also look for the situations in which we need to take time value of money into consideration, and the third thing that we will be covering is rate of return. What is meant by rate of return? What are different interest formulas that are used, right? So this is my plan for class 1. In class 2, I will be discussing about various aspects of cash flow. Are you able to see the slides? Okay. So in class 2, I will be discussing about cash flow, derivation of interest formula, and the concept of discounting, right? That is the plan for class 2. In class 3, we will be covering, giving you certain formulas for the cash flow situation which follows certain trend. The trend could be either arithmetic gradient or it could be geometric gradient. You understand what is arithmetic gradient, what is geometric gradient? The arithmetic progression, you know progression. You have arithmetic progression, you have geometric progression, you have harmonic progression. Are you aware of that? Or maybe for example arithmetic series, geometric series, right? Say for example 1, 3, 5, 7, 9, they are what kind of series? Let's say you have 1, 3, 5, 7, 9. What kind of series is this? Can you see this? Yes. Now let's say I have a series like this 1, 2, 4, 8, 16. What kind of series is this? Very good. So we will try to see if our cash flow follows either of these two trends, either arithmetic series or geometric series. We will try to use certain formulas which will make our calculations very easy. There are tables which have been developed which takes care of cash flow situations which adopt these two kind of series, right? Arithmetic series and geometric series. So we will be discussing this in class 3. We will also be discussing about equivalence. Equivalence, right? Suppose you have to add 5 meter and 4 centimeter. How do you add them? Because units are different. For one it is in meter, for other it is in centimeter, right? So what you do? You try to bring each one of them in a single unit, right? So either you convert meter into centimeter or convert centimeter into meter. Clear? So suppose you have to add 5 meter and 4 centimeter. What would be the result? Let's say in centimeter, 504, right? So what I have done, I have converted meter into centimeter, right? And then I have added 4 centimeter into that. So my result is 500 plus 4 centimeter is equal to 504. So this type of concept we will be using in the equivalence part, right? You will find that if somebody is giving you 100 rupees or $100, let's say today, and if somebody gives you $100 after 1 year, are they same? Suppose I give you $100 today, which I am not going to give you anyway, and $100 after 1 year, which one you would take? $100 today you want to get, or $100 1 year afterwards? Yes. Why? Because the value, the money loses value as the time passes. So this concept we will be covering in time value of money. Now suppose I have to add $100 today and $100 1 year hence, that means after 1 year. I can't simply add them, right? It is like a meter and a centimeter situation. $100 today, that means let's say this is $100, today is let's say November 28th, this is 08, let's say $100 November 09, right? Sorry, November 08 and November 09. right. Now, I can't add them simply, right, because both are not at the same level. It is like adding 5 meter and 5 centimeter or 4 centimeter. So, what I try to do there is, I will try to bring them at one point of time. Either I will bring this $100, either I will try to bring this $100 here, or I will try to bring this $100 here. Is it all right? Because right now they are both at different points of time. Clear? So, in this particular class, I will tell you how to use equivalence principle to do such type of problems, right. And then I will also introduce you to the different methods of evaluation, right. I will cover present cost method in that particular class, class 3 if you see. So, present cost method would be covered under that class. Then in class 4 we will continue with the present cost method and present worth analysis, right. This will be as far as class 4 is concerned, right. In class 5 I will tell you about annual cost method, and this we will be covering for alternatives with equal lives, unequal lives and with infinite lives, right. When you call infinite, it does not mean it is really infinite, but let us say a dam could have a life of let us say 100 years to 150 years, right. So, such kind of civil engineering structures we call them to have infinite lives, right. And here in this class 5 itself I will introduce you to rate of return, right. This is another method for evaluating different alternatives, right. In class 6 rate of return will be further continued, and then I will also tell you what is meant by cost of capital. You know, anything, any money you borrow from market, you have to pay certain interest, right. Suppose you want to construct a house, you may be borrowing certain money, right. It could be from bank or it could be some other lenders, right. So, you may have to pay certain money to him extra over whatever principal you have taken, and that is what we call interest. Clear? So, this particular class I will also introduce you to the cost of capital, right. In class 7 I have a plan to cover rate of return in detail further, and then using this method of rate of return, how to compare different alternatives. In class 8 I have a plan to cover project cash flow. Now, project cash flow you will find that they are slightly difficult to make when compared to ordinary situations, right. You will find that in any construction projects, in fact transactions go on every moment. Sometimes you have to pay some money, sometimes you will be receiving some money, sometimes you will be buying some material on credit. All those things you will find that so many transactions take place on a daily basis, right. Now, to cater to such situations and making a project cash flow diagram really becomes slightly difficult exercise. So, in this particular class, once you have got the background of cash flow, I will take up project cash flow, and then I will introduce you to the topic of CAPTIM, which is capital and which is the product of capital and time. That means, how much money you require for how much time, that is called CAPTIM, right. So, these two classes, that means class 8 and class 9, we will be covering these two topics. In class number 10, we will cover different factors which affect project cash flow. 11 and 12, we will cover depreciation and tax considerations. you will find that if you are not taking depreciation and tax considerations, your decision could be something else, right. Basically, you will find that most of the time you are trying to evaluate different alternatives based on the economic considerations, right. So, when you take depreciation and taxes into considerations, you will find that sometimes your decision may change. This aspect we will cover in class 11 and 12. In class 13, we will cover replacement analysis. I have already told you what is replacement analysis. Basically, it deals with finding the most optimal time to replace a particular asset, right. So, I have a plan to cover that in class 13. In class 14, I will try to cover the different methodologies available for selecting different public sector projects, because public projects are evaluated slightly different in a slightly different manner when compared to private projects, right. In class 15, I have a plan to cover break-even analysis. Class 16 and 17, we will discuss about risk analysis. Class 18 and 19, I will cover construction accounting basics, debit and credit, ledger and journal, all such things we will try to cover in 1 or 2 classes. And finally, we will try to cover balance sheet and profit and loss account in one of the classes. Working capital part we will take up in class 21, and in 22nd lecture or 22nd class we will try to cover ratio analysis. And finally, you have few more details of the different classes. For example, we will try to cover financial plan and sources of finance. Then I will try to cover earned value in class 24, 25th and 26th, the different methodologies for doing this work pricing, cost elements, bidding and award. And class 27 would be dedicated primarily to discuss about issues such as escalation and things like that, how to calculate escalation. Basically, escalation is the contractor, let us say if the project duration is substantial, he gets compensated for the increase in prices, because you find that prices fluctuate, right. Your material prices may not be same, your labor prices may go on changing, right. Similarly, the higher charges or the rentals for equipments may also be revised upwardly, right. So, these are certain things. Basically, we will be covering certain formulas for calculating the escalation, right. And then finally, it is wrongly written class 23, the last you should read it at class 28, right. We will cover different sources of finance, right, how construction projects are financed, right, what are the different ways of financing the projects, all such things I have a plan to cover in the last class. So, in a nutshell, this will be the guidelines. Sometimes there could be some overlaps here and there, but essentially I will try to follow these sequences, right. Okay. Now, coming back to the title of the course, it says construction, economics and finance, right. So, it has got 3 keywords. One is construction, second is economics and third is finance, right. So, I will try to briefly tell you what essentially these means, right. You must be finding numerous construction going here and there in and around your neighborhood, right. You must be finding some flyovers are being built, some highways are coming up, some road projects, some railways projects, some hospitals, right. So, you will find that all around you, you will be finding different construction going on, right. Now, when you call a project, there are many things which distinguishes construction project from other projects, right. There are projects taken up in manufacturing industries, right. There are projects taken up in let us say automobile, right. But if you see the construction projects, right, they are different from manufacturing, right, because in manufacturing you see you have a fixed establishment, suppose it is a car factory, right. So, you will find that workers are assigned the job, they know what they have to do. So, every day they come, they go to their respective workplace, they complete their work and then they go back. So, what you find, they are working under controlled environment, whereas in construction if you see people are working whether it is raining, whether it is raining, whether it is very high temperature, even in all these situations people have to work, right. Now, you will find that for a construction project, even the team which is selected for doing a particular work may be different and may be changing every time. The project manager may not be getting the same set of people which he must have got from earlier projects, which he must be having in earlier projects, right. So, it is slightly difficult task, right, because every time you are doing a project which is entirely new, right, you are working under a temporary establishment, right, then your team members are also sometimes unknown to you, right. So, these are certain situations which makes construction project management a very challenging task, right. So, I have highlighted few points which are unique to a construction projects. Say for example, if you see the first point, it is one time activity, right. Now, since it is one time activity, you really do not get time to learn the process and repeat it, like manufacturing. In manufacturing what happens? Suppose you have been assigned a task, initially you may spend some time in learning and then gradually you will be mastering them. So, your productivity increases, but in construction, since most of the tasks what you are doing may be of one time kind, right. So, you really do not have chance to improve upon. So, whatever you do, it must be performed correctly the first time and in fact every time, right. Then modern projects, you will find that they are very complex, right. You take any modern building, it will have different components. There would be people for providing civil facilities, I mean for providing the inputs on civil engineering, electrical people would be involved, mechanical engineering people would be involved, there would be people from instrumentation background, there would be people from heating, ventilation and air conditioning background. You will find so many people are working and it involves so many trades. You will have foundation, you will have superstructure, you will have finishing items, you will have plumbing and sanitary, right. You will have air conditioning, you will have public announcement system, right. Many things, you will have landscaping, right. You will have closed circuit cameras, you will have firefighting. So, what you find? Modern projects are getting very complicated, right. Now, people from different countries may be working on a single project. Somebody may be from UK, somebody may be from Singapore, somebody may be from USA, somebody may be from Gulf countries. Now, coordinating among so many stakeholders, so many persons becomes really a very difficult task. And remember, you are working in a temporary setup. Even if you have built the rapport with your team members, tomorrow you are not sure whether you will be getting the same set of people. So, that is the major challenge that modern project faces. You have suppliers from so many countries, you have vendors from different places, you have workers from different countries. Their cultures may be different, their work habits may be different, their style of working may be different, right. The kind of temperature or the kind of climate they must be habituated to work, all those things may be different, and still you have to accomplish the objective of schedule, cost, quality, right, what is known as iron triangle, right. So, you have a triple objectives, right. You have a schedule here, you have a cost here, and you have a quality. Now, these are only few objectives, there are many other objectives in any project. You should see that there are very few disputes, or rather it should, you should aim for no disputes between different stakeholders, right. You should see that your clients are satisfied, you should see that your staff who are working at your project sites, they are satisfied, right. You should see that some technological innovations or something to give you satisfaction comes at the end of the project, right. All such things, although they are very simple to state, but they are very difficult to get, right. As a project manager, you will have different challenges, right, and you have to work under so many constraints, right. Now, you will find that the projects, modern projects, they are very, the budget or the cost is very high when you compare to traditional projects or the projects which we have been doing earlier. Right. Now, there are high risk of failures also. At the beginning of the class, I mentioned about few of the risks that modern projects have. There could be default by some of the stakeholders, right. Some of the stakeholders may not be fulfilling their commitment, right. There could be political risk, right. There could be uncertainties on the part of, let us say, labor availability. So, the more the risk you find, you will find that the chances of failure are also quite high. Then there are difficulty in defining quality standards, right, because sometimes it happens in many projects, the clients may not be knowing what exactly they want, right. So, until unless you are clear about what you have to deliver, where is the question of quality coming? So, these are some of the challenges. So, until and unless your specifications are frozen very clearly, your work methods are established very clearly, you know what you have to do, you know what kind of specifications you have to adhere to, providing quality becomes difficult. Then there are certain other unique features, like for example, the client may not be having enough experience of getting similar kind of projects in past. So, that creates another problem. Suppose you are a contractor and you are working for an owner who has given you to construct, let us say, a power plant, 500 megawatt power plant. Now, if you find that if the client is not experienced, he may not be familiar with, or rather he may not be aware of his requirements. So, every time there would be change orders, right. Now, more the change orders, you will find working becomes quite difficult. You will not be able to set a target, you may not be aware about the final cost that the project is going to take, and under such conditions project management becomes very difficult. Then in construction you will find that especially in countries like ours, we have to deal with untrained workforce, right. People are not that skilled. What is the position in Ethiopia? Do you have a skilled workforce? Yes. What is the situation in Ethiopia as far as construction workers are concerned? Are they skilled? Majority of them are unskilled. Okay. So, similar situation exists here also in this country, and that poses another challenge, because most of the time you will find that these workers come from agricultural background. So, whenever they have a off season in agriculture, they come to work for construction. Is it the same in Ethiopia? Okay. So, this poses another challenge, right. So, these are certain unique features of a construction project, right, and that is why in the beginning I told you construction project management becomes very challenging when compared to let us say manufacturing industry, or let us say some other industries, right, because they are working under permanent establishment. They are working in controlled environment. They know their system. They know what they have to do tomorrow, because they have been doing this work from so long. But in construction, these are not the situations, right. Okay. Now, when we are into the construction keyword, I will also briefly be telling you about different phases of a construction project, right. Now, many people, rather many researchers have classified and given different nomenclature as far as different phases of a projects are concerned. Some researchers, they simply say planning phase, execution phase and operation phase, right. So, you have a planning phase, you have execution phase, and you have operation phase. Right. This nomenclature is given by some researchers, right. Now, another researchers, they have classified in different other phases, they have given different terminologies, right. But without going into too much of those aspects, I have simply given you some nomenclature which we will be using more or less, right. For example, the first phase is conception phase, right. Now, what happens in this phase? The idea for project is birthed within the client organization and its feasibility determined, right. So, basically what is happening here? You realize that there is a need for the project. Say for example, take some locality, right. The children there are unable to go to school because there is no school in that locality. So, what is realized? You realize that there is a need for putting a school here in this locality. So, you have realized the need and then you have come up with the idea that okay, we need to put a school here, right. Now, you will determine its feasibility. If it is a school, what kind of school? Should I go for primary school? Should I go for middle school? Or should I go for high school? Right. So, what I am doing? I am trying to explore the feasibility, right. First, by identifying my needs more closely. So, if I find that there is a very great need for putting up a primary school, I will go for primary school, right. Then comes planning phase, right. So, what happens in this phase? We discuss or we chalk out different methods to achieve the original idea. Original idea was to come up with primary school. We will plan for it and then we will do all the design part, right. So, if it is a school, right, let us say it is a primary school and now we are developing plans for it, right. Okay, how many classrooms, right, how many teachers room, right, should there be a playground or not, all such things we are planning and accordingly we are developing the design also, right. Then you have production phase. So, what happens in this particular phase? The plans are converted into physical reality, right. That means, whatever plans, whatever specifications, whatever designs we had come up with in the planning phase, now it is getting translated into production. That is, it is really a construction phase, whatever you call it, right. In this definition, it is now execution stage, right. So, plans have been made, now I am trying to execute them. That means, I will construct the building physically at some location, right. Then once the facility is constructed or built, it is handed over to whom? To the users, right. So, that is called handing over phase. So, in this phase, the finished project is handed over to client for use, right. So, now let us say the school is operational now. Now, that is what is utilization phase. The client makes use of the finished projects. So, now let us say the admission process is started, client has taken over the school and they have started the school, right. Now, finally, you have a close down phase. After the life of the building is over, you close down it, maybe you demolish the building and then you come up with the new building, or depending on the need at that particular time, you may come up with something else also, right. So, these are certain phases of a construction project, right. It is just like let us say you can compare this with human basically let us say conception stage, then childhood, then adulthood, like this. A project also goes into similar kind of a situation, right. So, you have noted this down, at least the main nomenclature you can note it down. For example, conception, planning, production, handover, utilization and close down phase, right. Okay. So, this is as far as first term of this particular course is concerned, construction, right. Now, we will discuss briefly about construction economics, right, that is economics part. Now, we need not go into too much detail as far as definition is concerned, right, but if you say, if you have to say in a few lines, you can say, or rather you can define construction economics as basically allocation of scarce resources profitably, right. What we are doing here? We have different resources, right. What are the different resources in construction that you employ? You have labor and staff resources, you have equipment resources, you have material resources and you have money, right. These are some key resources employed in any particular project. Is it all right? Is it okay? Okay. So, basically we are trying to allocate them in such a way that it results in most optimal solution or most optimal allocation, right. That is what we are concerned primarily in studying this particular part of the course, right. And when it comes to finance, basically it is nothing but allocation of financial resources profitably, right. So, there is slight difference. In economics we are concerned about all the resources, whereas in finance we are concerned mainly about financial resources, right. So, we have to come up with different profitable combinations, and then we have to select the most optimal solution out of that, right. Now, we will try to analyze what kind of situations we come across in, let us say, day to day construction, right. There are many circumstances you must be coming across. Let us say if you are working at a project sites. For example, there could be many design options available to you, right, and you may have to choose one option which is the most profitable or most economical option, is it not? Even in your day to day life, why to focus only on construction? Even in day to day life you must be coming across many situations wherein you have to take certain decisions, right. For example, you may have to travel from one point to another point, let us say one city to another city. You may have different options. You may take a car on hire, you may go by some public transport, maybe some bus, you may choose to travel in rail, you may choose to travel in flight, right. So, what are these? They are different options available to you for doing the same task. What is the task? Task is visiting one city to another city, and there are different options. I have hired car or rental car, I have a public bus, I have a rail transport, and I have a flight, right. Now, I have to come up with that particular answer or that particular mode which is most economical for a given condition under a given situation. Sometimes you may find that going by flight may be better option if time is another constraint, right. But if you see that there is no constraint on time, you may like to go by rail transport or maybe by bus. Sometimes some options may not be feasible. For example, between two cities the flight may not be existing, right, there may not be air service. So, what we have to see is, as an engineer, remember you have to perform two tasks on a day to day basis. You have to see what you have to do and then think of different ways through which you can achieve that task. So, step 1 is what? Thinking of various ways or different means to achieve the task, and then selecting the best method or the best possible means to achieve that particular task. So, as an engineer you will find that these are the two things that you have to perform day in day out. Coming up with different challenging methods to do a particular task, and then putting a price on each of these methods. It is not that, let us say, I come up with some innovative design and it is costing hell lot of money, it is of no use. So, as an engineer you have to realize that whatever plans you are giving, whatever designs you are giving, whatever specifications you are giving, you must take responsibility for its cost also, right. So, it is no good coming up with some design which may look very good, but it is very costly. So, in today's scenario, engineer has to own the cost of their design, cost of their plan and cost of their specifications. So, is it clear? Three things you have to understand as an engineer and a manager. One thing, challenge the way in which you are performing a given task. You think, can I do it this way? Why can't I do it this way? Like this, you have to come up with different methods. You should not sit there or you should not stand there and do the way people have been doing it in the past. You have to come up with different ideas, different alternatives, right? And then you have to evaluate them, right, in terms of money, right? Each of your methods that you are coming up with must have a value of money associated with that, right? Now, money, why I am using it here? Because that is the most easy method to compare different alternatives, right? So, that is why I am putting emphasis, right, as far as this particular course is concerned. There are many other ways to evaluate, but in this particular course you will find that money is the most suitable term or most suitable parameter on which we can compare different alternatives, right. So, as an engineer you have to generate different alternatives for doing a given task, right, and then you put a price figure on each of these methods and then whichever figure suits you most under a given situation, you can choose that option, right. So, this is as far as the definition of engineering goes concurrently, right. Now, let us say I will give you many examples. Say for example, concrete production, right. There are numerous ways in which you can produce the concrete, right. What are the different ways in which you can produce the concrete? It could be a simple mixer, it could be simple hand mix, right. It could be produced in batching plant, semi automated batching plant, it could be produced in fully automated batching plant, right, or you can get it from some ready mix concrete supplier, right. What we have seen here is task is only one, production of concrete, right, but we have identified different alternatives, hand mix, mix using simple mixer machines, right, semi automated batching plant, fully automated batching plant and maybe buying from ready mix concrete suppliers. So, as an engineer, first task is done. I have listed out different methods. Now, my next task is to assign what? Cost or the price for each of these methods which I have generated. So, I may see what is the cost of producing 1 cubic meter of concrete using hand mix. What is the cost of producing 1 cubic meter of concrete using, let us say, simple mixer machine? What is the cost of production of 1 cubic meter of concrete using semi automated batching plant, using fully automated batching plant, and finally, what is the cost of buying 1 cubic meter of concrete from some supplier of ready mix concrete? You will agree that cost for each of these options would be different. Do you agree? Do you agree to it? Right? Now, the alternative that you are selecting may be different depending on the situation. Suppose you want very high quality concrete and that too in very large quantity. Option 1 is ruled out, hand mix is ruled out. You agree to it? If you want very high quality concrete of very large quantity, hand mix won't do. So, although your price was less there, it is not suitable for this kind of situation. You may look for some other alternative. Maybe either you can go in for fully automated batching plant, or you may either go for buying the concrete from a supplier, ready mix concrete supplier. So, you have to see that what is the situation, what are the different alternatives, which alternative is feasible under this situation, and which is the most economical out of those alternatives. Is it all right? Is it okay?
Yeah, it's okay.
Okay. Now, let us say second point, come to the slide. Second point, you find selection of one construction methodology out of several construction methodology. So, here also I will give you example of, let us say, concrete placement. Suppose you have got the concrete with you, now you want to pour it or place it at some location. Now, here also you have to think, can I manually place my concrete? That could be option 1, manually placing the concrete on head loads, right. Second option could be taking the concrete in some vehicle, it could be tough rider or it could be front load dumpers of a small capacity, in which you can transport the concrete and pour it, or it could be through a crane and a bucket. So, you pour the you place the concrete in the bucket and transport it through the crane, and another option could be put a concrete pump, right. So, we have generated 4 alternatives, there could be many more. If some engineer, some manager is quite innovative, he may come up with different alternatives again apart from these 4. So, that is where engineering lies. You have to come up with different possible alternatives to do a particular situation, and remember, all these things make you or help you in being more competitive. Suppose you are not analyzing all these situations, you may be doing a work which your competitor must be doing at lesser price, quite possible. Suppose you have chosen a wrong methodology which is very costly, because you have not paid attention to cost part. So, your competitor will be happier, because he may come up or he may do the same job in more economical manner. Clear? So, what you have to do is, I will repeat once again, is that as an engineer or as a manager, you have to come up with different alternatives for a given situation, for a given problem situation, and then you have to analyze each one of them regarding their cost, and then choose the best possible alternative for that given situation, right. Your decisions may change if situations change, right. So, you have to put proper emphasis on that. Then there could be a problem situations of, let us say, replacement. Suppose you have bought a excavator, right. Excavator, you understand, it is used for digging the earth, right. So, let us say you have purchased an excavator and your manufacturer has said that its service life is, let us say, 5 years, right. That means up to 5 years you can work with this particular equipment profitably, right, or let us say some life is given to you, right. Now, when you are operating this excavator, you will find that initially the productivity would be very high, because it will be working very efficiently, right. Over the years, you will find that due to wear and tear of the equipment, its efficiency will be coming down, it might consume more fuel. So, your operating labor and operating power charges, fuel charges will go up. So, you will find that initially the cost may be low, right. Initially the cost may be low, right, and then it will try to have like this, sorry, it will be other way round. So, it will be like this. Initially the cost is somewhere, then it starts in the initial years there is slight reduction, and then after certain point it starts increasing, right. So, you find that particular point from where the cost has started increasing, and that is the point we try to find out in replacement analysis, right, because cost is not uniform throughout the life of the equipment. In the initial years it is low, right, and after certain point of time it starts increasing, right, and that is the time, ideal time to replace it, right. Now, here I would like to tell you, suppose if you have not taken a decision to replace it, right, what will be the case? In economics, people say that if you are not acting at this point of time, you have also taken a decision, right. So, not taking a decision is also a decision. Are you do you understand this? Suppose you find that there is a problem and you have not acted upon it, right. This again is a decision not to act on a problem or overlooking a problem, right. So, that is called, in most of the text you will find, doing nothing, right. So, one option is always there with you, which is doing nothing. This is also a decision. For example, there are situations in which you have an option of doing nothing, you have an option of increasing the capacity of a plant to, let us say, 2 times. There could be an opportunity to expand the plant to, let us say, 3 times. So, these are also decision situations, and therein lies doing nothing option also. So, doing nothing also constitutes a decision module, right, and that also we will be taking in our analysis. क्या टाइम हो गया? चल रहा 5 मिनट है अभी, ठीक है. Okay, then there are different investment decisions that you may have to take. For example, whether to take risky investment with high returns or whether to go for safe investment with low returns. So, you have to take decisions for such situations also. Now, in many situations you will find that these are subjective in nature also, because it depends on the individual's perception of risk, right, whether he is risk averse, whether he is risk seeker, or whether he is risk indifferent. So, literatures have classified different people in different these 3 categories, like you have risk averse, risk seekers, risk neutral, or let us say risk indifferent, and depending on that they will come up with the decision, right. So, that is why you must be finding that in any business people do come up with different decisions, right. So, let us say if you give the same problem situations to 3 or 4 person, you will find that they react differently. So, it also depends on what kind of risk perception or what kind of risk attitude they possess, right. So, this type of situation also we will be facing, and accordingly we will develop some methodology to tackle such situations, right. Then there are more problem situations. For example, allocation of funds for few public projects. Now, you will find that most of the governments, whether it is Indian government, whether it is US government, or whether it is Ethiopian government, they will have less budget and they will have more works to do, right. So, under such situation, under such fund constraint, what is the best way to evaluate different competing projects? That also is some of the decision situations that one faces. Okay. So, one thing you must have noticed now, I have already told you this thing, that the common things in these situations are each one of them involves some monetary considerations, that means something to do with money. Second thing is, as an engineer or as a manager, you have to generate different sets of alternatives, and finally, our aim is to evaluate the best out of them under a given situation, right. So, the role of engineers I have already discussed. Just to summarize, to generate several ways of doing a particular work, to select the most economical way of doing a particular work in a given situation, and finally, owning the cost of a design and construction methodology. This is very, very important, right, because until and unless you have a feel of the cost that your decision might result into, right, until and unless you own this, you won't be able to judge the alternatives in an appropriate manner, right. Okay, all these things we have already covered. Some of these things I will cover in next class also, right. So, what basically I will just try to summarize whatever we have discussed in this particular class, introductory class. I have given you some introduction on the topics that we are likely to cover in this particular course, right. I have told you what kind of decision situations you face in a day to day situation, day to day construction. I have given you some examples wherein you have you can see how to generate different alternatives, right, how to bring the cost aspect into it, and then finally, how to what next step we have to carry out, right. So, these are just basic introduction. Next class onwards, we will go into the details of this particular course, and I will tell you basically in next class what are the methods of evaluation when you are not considering the time value of money, and what are the different methods of evaluation when we consider the time value of money, right. So, with this I close this particular class, and I invite you to ask your doubts to get it cleared, right. Any doubt, any questions you have in your mind, you are free to ask. Please go ahead. I understand this is just an introductory class, but anyway, if you have still few doubts, you can ask.
Hello, sir.
Hello, yeah.
I have a question. Would you send the slides?
These slides right now I will not be able to send you, but it will be sent centrally, I believe. Our dean is taking care of that, and whatever information, anytime I get the information, I will be able to talk on this particular issue. How to send these slides, all these things I will discuss, and then I will let you know. But yes,
Okay, it's clear.
I can send these slides, there is no problem absolutely, but let me give some time. I mean, you please give me some time so that I compile it and then send it to you. And I will also we will also be sending the recorded CD to you.
Okay, thank you.
Thank you. Any other doubts? So, we meet on next Wednesday. Right? Thank you and good night. ठीक है, कट गया,
लाल बत्ती का
अभी तो लाल नहीं आया. बहुत एनर्जी लगता है इसमें.